Hi, good morning, everyone. It's Sean with Paycheck the Portfolio. Today, we're going to talk about from spark to fire how to start investing with $500. This is week 4 of the Spark to Fire series. Basically, what I've done here is opened up a starter account so you can click along with me to learn how to implement the Paycheck the Portfolio system. If you're new to my channel, all of my income rolls into a brokerage account. I don't live out of a traditional checking account. I fully invest in the 3 buckets: long-term growth stocks, closed-end funds, and high-yield funds. I treat the brokerage more like a private equity company with my background and my experience than a traditional, basically buy and hold 30-year investor. I want equity and I want growth and I want compounding so it can set me free from a 9 to 5 job in, say, 5 to 10 years versus 30 years. If you look on the right, I put a quote here that I saw online and it resonated with me. And it's really, why I live this way and why I'm trying to teach these methods that I've learned over the years running private equity companies. And so, you talk about the American dream and what that means to most people. Unfortunately, most people live this American nightmare where we work 40 hours a week for a 1% or 2% raise that doesn't beat inflation. Saving $100,000 that loses $2,000 a year in purchasing power. Getting a $50,000 or $60,000, or even these days, $70,000 car loans, and calling that normal, but saying a $50,000 investment in stocks is too risky, or that leveraging margin smartly is too risky, right? We got to change our mindset to be business owners, not consumers. The safe path is mathematically guaranteed to keep you working forever. And the only way out is to buy assets to accumulate wealth and to create cash flow. And so I have experience in the private equity space, and we would go and acquire basically imaging centers and grow our equity and grow our cash flow at the same time. So all I'm doing is taking that years of experience of running that business model and applying it to a brokerage. And I have been investing since 2008. So I was already familiar with basically the E-Trade platform and how money management works and how to create a business from both equity and cash flow. So you need all of these prongs working together for you to break you free from a 9 to 5 job. I put a quote at the bottom because it's been a rough couple weeks in the stock market, which we're going to talk about today here. And I put a quote from Warren Buffett. He says, "The stock market is a device for transferring money from the impatient to the patient. This is not a get rich quick scheme. This is a dollar cost averaging, smart application, fully invested program to where we're taking, again, all of our money on the front end, fully investing that money and letting it compound for us over 5 to 10 years versus having to invest 10% or 15% on the back end and having to wait 30 years to retirement." So if we look at the portfolio here, let's jump right into the starter account here. If you look at the portfolio, just in full disclosure, right, look at it as it is and how it sits. The net portfolio value is sitting at $2,766. Again, since we opened up the account, we were kind of buying at the highs. That's okay. There's a method called dollar cost averaging. So as the paycheck comes in every 2 weeks, I'm going to be buying at the highs, I'm going to be buying at the lows, and I'm going to be buying at the averages. So again, time is the friend here of investing. Looking at an 8% drop on, say $3,000 isn't the end of the world. As we invest, we're going to be buying at those lows, and it will smooth out over time. The key is consistency and not getting discouraged, especially in markets like we're in right now with a lot of volatility. If you look at the available for withdrawal number, that's going to be key when we start basically floating our bills. That's what's going to allow us to draw money out and to pay our bills and the figure we need to watch. You can see that that's sitting at $766 right now. And I have my E-Trade debit card. I have my water bill and my electric bill scheduled to come out here at the end of the month. So it will tap from that available for withdrawal. And you can click on the balances tab, which I have a screenshot of in the Excel file. I just kind of wanted to show you around the platform. So if you click on this balances tab, it will show you all of these metrics here. Basically your account value, any cash that you have sitting here. So this is from dividend payments I've already started to receive that are accumulating in the form of cash. And then down below, you can see the equity percentage of the ownership of the account. So again, as we start to float bills, we're going to tap from that equity. Again, all of my income comes into the brokerage. I'm fully deploying that income in my total account, my big account that's over $320,000. This starter account is just to show you the methodology of how I run that larger brokerage account. But what's going to happen, obviously, is we tap our bills, it's going to draw from this 100% equity component, and that's how we're going to stay fully invested on the front end. Again, I'm investing in the 20 to 30% blended yields on the front end, and I'm borrowing at 8% from E-Trade. And that's creating a positive margin arbitrage or business spread every cycle. And that's the way that works. So I wanted to show you transparently the brokerage. Let's jump right into the Excel file. So again, I had the brokerage screenshot from last week, just so you can see I was down 3% basically. Now we're down 8.5%. Not a big difference, as you can see, with a small account. I was at 29.24 last Wednesday. Today I'm at 27.68. I know it's pretty small, but I just wanted to keep both screenshots here just so you can see the impact of the volatility on the actual brokerage account. So again, 29.24, negative $85 last Wednesday. Right now we're sitting at 27.68, negative 253. It didn't really impact our available for withdrawal a whole lot. As you can see on these numbers, last week it was 925. This week it's 768. So as you start living out of the brokerage account, you have to understand how equity will impact your available for withdrawal as the market's moving, right? So last week we were at 925. This week we're at 768. And you just have to be mindful of that and to manage it accordingly. If you scroll down to the bottom on the estimated income tab within E-Trade, you can see the next 1 month, we're projected to get about $62 of dividends. The way E-Trade manages this is they take your last distribution and they annualize it out over 12 months. Some websites will take the annual yield and divide it by 12 months. So if you see some variations in projections, that's normal, which is the way that folks slice and dice basically dividend yields. So again, next 1 month, you can see, and then the next 1 year, you can see we're looking at $683 of total dividends, which provide cash flow for us and allow us to expedite our business growth. I added the brokerage to Snowball Analytics just so you can see this here. You can plug in for free a brokerage account in the Snowball Analytics, and it will grab some of these things for you if you want a more visually appealing view. So again, you can see the total portfolio value at the top, the profit or loss currently, and then on the right, it will calculate its version of the passive income and show you what that equates to annually. I like the chart below because it will show you the 3-bucket methodology. You can see high yield, growth, closed-end funds, and then cash that's trickling in from dividends and growing the portfolio as well. So even though the portfolio is down because of the market volatility, there's still cash flow coming in. And again, I'm still buying with that cash flow and living out of the brokerage and taking advantage of that volatility at better prices. We're trying to hit a 40% to 60% allocation. Basically, what that means is I'm trying to get 40% in growth and closed-end funds and 60% in the high yield funds because they serve those different business purposes. If you scroll down below, you can see the future payment projections between the monthly and annually projections on Snowball Analytics. This is the business spread calculator. Again, we talked about the paycheck to portfolio method with income coming in, going into the brokerage account, investing into those 3 buckets with the blended yield between 20 and 30%, and then floating our bills with margin so we can stay fully invested. So again, we're investing at 20 to 30% yields here and borrowing at 8% here. So that creates a business spread on our own money every 2 weeks. If you look at it down here at the bottom, most simply, $500 times 25% is $125 a year approximately, and $10 a month. So every paycheck that comes in is accumulating a cash flow for me, and I still own the equity. Instead of having to trade my time for money and spend that money to zero and then repeat that vicious cycle over and over and over again, I'm fully investing in the assets that I will continue to own and that pay me over time and grow. That is the key to freedom, and that is the key to accumulating assets versus liabilities and bad debts. So this calculator, I just basically update it every week to show you the portfolio value. I don't have any debt yet because those bills haven't pulled. They're getting ready to be pulled here at the end of the month, so we'll be updating that in future weeks. Right now, I'm adjusting the blended yield here week by week with new investments that we made. And we've already deployed our $500 this month. So we're waiting till next month till we start getting paid again from this brokerage account to fully deploy it into fresh assets. The margin interest rate I put here, the equity percentage I put here, and the business spread number will be here. So as I float, let's say 350, it will update the business spread, the equity, what that interest will cost me annually, and then basically calculate the business spread for you. This calculator is available on our membership Discord if you want to play around with it and you actually want to touch the document itself. If you look at weeks 1 through 4 transactions here, I've just updated this tab. Again, you can see the initial transfer of $2,500 to get us started. Again, you need a $2,000 minimum to open up a margin account. And that is the floor of what's required to maintain that margin account, which is why I brought $2,500 in to get us started. You can see I immediately deployed that $2,500 into assets. It immediately started to create some dividends for the brokerage account. You can see I transferred $250 here with the paycheck. I deployed that $250 with additional purchases. Dividends continued to roll in. I made another transfer of $250. I deployed that money immediately, and then dividends continue to roll in. So you can start to just visually see, just by looking at this, how that cash flow starts to come into the account and prop it up, right? And then over time, we're going to get that equity build with the growth and closed-end funds, and we're going to get the cash flow, which will allow us to stay fully invested. I'm not necessarily looking for my high-yield funds to grow. I'm looking at it to support me and to support the brokerage so I can be fully invested and to use that as leverage to keep me fully invested on the front end versus investing on the back end. If you look at the week 4 actions, let's just go through this really quick. I've received the debit card. It came in the mail. It's in my wallet. Again, I'm planning on giving this to my 17-year-old daughter. Her name's Emma. I have 4 kids. Emma's getting ready to go off to college here before too long. And so I plan on giving this to her and allowing her to just spend on that E-Trade debit card and tap from this brokerage account for whatever she'll need in college, such as books, different things, gas, driving her car, all that good stuff, and just living day-to-day life. So that E-Trade debit card is in my wallet. All of the E-Trade routing numbers are the same. So basically, if you want to auto draft from your brokerage account, you just use that routing number. The account number is what differentiates your account from other brokerage accounts, and that's what you would use if you wanted to pay your bills, with a transfer, such as my account. I pay my mortgage out of it and everything, and that's what I use. Again, we fully invested the $500. We're just waiting for those bills to be tapped. We talked about the 40-60 split. The auto drafts were set up for my water bill, which is expected to be $43. And the electric bill here that's expected to be $263 this month. The available for withdrawal was impacted due to market volatility from last week to this week. You just want to keep your eye on that so you can manage your available for withdrawal and live out of the brokerage. And if you click on the margin tab within E-Trade or any brokerage, quite frankly, it will show you your balances tab, your equity percentage, and that's what you have to pay attention to when you're living out of the account. We have a membership Discord. Again, all of the resources are under the pinned comments, but we have a membership Discord with folks living out of multiple brokerage accounts here. If you need support and help with a good community, that's available to you. And I also took a screenshot of basically the balances tab within eTrade, just in case you need to reference that later. One last thing I want to show you that's in our membership Discord that you can get your hands on if you would like is this Spark to Fire. We call it the Paycheck to Portfolio Fire Model Pro Calculator. And what this does is you can punch in your own numbers here. So we're starting out with the 2766. We have zero margin right now. We're contributing $6,000 a year if you take that $500 amount payment. We're adjusting with a 4% annual inflation rate. You'll see on the calculator that will adjust monthly. Probably overkill, but again, I would rather estimate conservatively looking forward. We're saying we're going to spend about $4,800 in living expenses. Again, some months that's going to adjust up and down depending on the seasonality in Texas with the electricity and other things. It grabbed a forward-looking projected yield based off of this. So basically what I did here is punch in the holdings from the Spark to Fire series. We're dripping the growth and the closed-end funds, and we're taking the high-yield funds as cash to support us as we live out of the brokerage account. What that does is it grabs this forward-looking projection on annualized yield. And again, you can see 40% allocation to drip, 60% allocation to non-drip or cash flow looking forward. And then you can add your own margin interest rate right here. And what this calculator will do is it will show you basically the power of compounding. Again, these are projection tools, so they're not meant to perfectly grab dividends or to perfectly project. They're just showing you what compounding can do for you and how fast your money can grow if you're buying assets instead of liabilities. So again, the first month here, and let me make this one a little bit bigger just so you can see it. First month here, we're at $27.66 currently. This is projecting $6 in drip dividends. We can see that's a little bit higher on the E-Trade side so far. The non-drip would be $42 that we would take as cash. Again, this is going to compound in the background. We're taking this as cash. We have no interest to pay the first month. So the cash after interest comes straight over to $42. Monthly expenses with inflation, you'll see that this increases every month because of that inflation rate. So we're going to say the margin used is $358. That's what we're going to float. So basically the $400 minus the $42 in cash we've generated, we've already eroded our living expenses down to $358. We haven't paid down any margin yet because we're tapping from our own equity and we want to compound. We want to stay fully invested. Therefore, $358 is our debt on the front end, but our W-2 contribution comes in at $500, and our net portfolio value is here, and our equity is here. If you scroll all the way down to the very bottom, you'll see if you didn't change anything, in 5 years, your gross portfolio value would be approximately $38,000. You would be dripping $87 of that every month. You'd be generating $578 of cash flow. You would be paying basically $105 in interest for staying fully invested a month at this point. Your cash after interest is accumulating, which you can see here, which is going to ultimately set you free from these bills. And in my case, all of my bills, and that's the point of the whole system. You can see the monthly expenses with inflation baked in. You can see that the margin usage is slowly declining as the snowball builds in the background. And eventually this will start to flip to where you start paying down your balance and your equity grows all the way up to 100%. You can see the debt here, the total W-2 contributions, and the net portfolio value and your equity at the end of the day. So there's 3 engines to this machine. You have the drip dividends, which compound for you. You have the cash flow, which is constantly providing you life and freedom over time. But the biggest key to the whole thing is you're fully investing money that would have otherwise been spent to zero. It's now an asset for you that you own, and you're leveraging yourself in a smart way. You have to really watch your equity, and you can live free from a 9-to-5 job and provide yourself freedom instead of liabilities. We have a dashboard on this calculator, which will show you basically all of those things I just articulated, but just in a visual. Now, the stock market's not linear. Some months it's going to be down, some months it's going to be up, but the overall trend line is going to be upward. And then you can see we have a debt and equity trend line, which we basically talk through there, but you can click on the equity here and see when your equity changes, when your debt changes. You can hover over all these. You can see your portfolio growth. And again, what I hope happens is folks watching this, in 12 to 24 months, when your portfolio is 20 grand, you're ramping in more bills and you're compounding your account much quicker. But this gives you the cash flow waterfall, the income and expenses line item. So again, this is available in the membership Discord, and all of my resources are under the pinned comments. I know we talked about a lot. I hope you found this video useful. Please like and subscribe, and we'll talk to everybody soon. Bye.